Hey everyone, welcome back to another NFP session. Let me know if the audio is coming through okay. Everything is all right. Video stream is coming through fine. And we can get started. All the way from South Africa. How are you? All right. Everyone's going to be waiting for the NFP session for tonight. Let me know if the audio is coming through okay. And we can get started with news trading session number 1. It's Nonfarm Payroll. Okay. All right. So, my name is Vira Injero, and we can get started with the session if everything is coming through okay. Good. All right. Just a quick disclaimer before we begin. Any opinion discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risk and delays in order execution. Be attentive when determining the volume of your transactions and consider all possible risk factors. Okay, so there's going to be a promo code that you can use to double your deposit bonus as per usual. So we are going to share that in the next slide, and then you should have access to the private Telegram channel if you register this webinar through the website, and if you register your email, you should be getting that link via email. All right, a little bit about myself. We kind of try to make this quick a little bit. So my name is Vira Injero. I've been a full-time trader basically for the past 20 years, so more than 20 years experience there. Also a professional trading coach and technical analyst since 2007. I do have an expertise in Ichimoku Kenko Hyo, and I'm also a director at Zenefix, an independent market consulting company. Guest speaker at the Trading Investing Expo in Australia, Invest Fair in Singapore, and the Australian Technical Analysts Association and Australian Professional Technical Analyst Conferences. Okay, so that's a little bit about myself. We are going to get this started very quickly because I need to discuss about the current situation with the NFP as well. Okay, so let's take a look at basically what the Bureau of Labor Statistics is, what the NFP is, what is the unemployment rate, and as well as the US average hourly earnings. These are the 3 data that we are going to be focusing on tonight. Now, when we talk about employment numbers, obviously we have to take a look at the weekly employment claims as well, but it kind of adds up into that. We also take a look at the economic calendar and a little bit of a chart history of what happened usually. And then there's also going to be trading strategies that I'm going to share with you. And then once we get this done in the next 27 minutes, we'll kind of plan our trades for the NFP. Okay? All right, so this is the code you can use to double your deposit bonus as Nonfarm 2023, right? So feel free to use it. It should be valid until the 31st of December 2023. But yeah, you can use this to double your deposit bonus. So make sure when you are depositing into your Octa account, you use this code to kind of take offer on the promotion. Okay, so let's talk about the Bureau of Labor Statistics and what the Bureau of Labor Statistics is. So the Bureau of Labor Statistics is a federal agency that collects and disseminates various data about the U.S. economy and the labor market. It also reports, its reports includes the CPI, Consumer Price Index, which is going to be released next week on Thursday, 12th of October. We're also going to be trading the CPI live as well. And not just the CPI, they also publish the PPI. And both of which are basically considered important measures for inflation. So within the labor market data, the most interesting aspects are obviously the number of people employed outside of agriculture. This is what we call the non-farm payroll, and as well as the unemployment rate. So a little bit of a disclaimer here, and I do apologize. I do have a little bit of a cold. And if I can't, it kind of sounds a little bit off here, but yeah. Anyway, when we talk about the NFP tonight, that is the NFP that's released by the Bureau of Labor Statistics. There is another NFP that is released last Wednesday, it was the ADP NFP. Now, the ADP NFP is a private survey. ADP is basically a private company that does payrolls, and they base their numbers on the people that are using their payroll systems, right? So it's different from the NFP that we are going to be looking at tonight, which is published by the Bureau of Labor Statistics. Now, at the very beginning of the year, the BLS, or the Bureau of Labor Statistics, publishes a calendar with releases for the entire year. So we kind of know when this is going to get published. And the unemployment data, as well as the NFP numbers, are typically published every first Friday of the month. But if it falls on a holiday, the publication is usually postponed to the following week and occasionally to Thursday of that week. It's very rare, especially like Good Fridays, which is a public holiday, but the employment numbers typically get released during the Good Friday as well. Okay, inflation data, the CPI and the PPI typically published on the following Wednesday or Thursday after the labor market data gets released. So for next week, it's actually going to be on Thursday. So that's how it works. Okay. Now, what is the non-farm payroll? The non-farm payroll is basically a monthly release by the U.S. Bureau of Labor Statistics, or the BLS, that measures the number of jobs added or lost in the U.S. economy, excluding farm-related jobs, private household employment, and non-profit organizations. So market analysts and investors usually look for the NFP figures to be above 200,000 to be more of a positive sign of a healthy job market and a growing economy. However, the interpretation of the NFP data can vary depending on the different economic factors and the context it is released in. Now, let me give you a little bit of an illustration of what happened in the past 2 months. I believe the number in the past 2 to 3 months has been below 200,000. And what's interesting, we've been doing the NFP pretty much every month since May anyway. And for the past 5 months, the last 2 months was a little bit complicated because we get the NFP release and then the previous month's number get a downward revision. So this is probably something to watch out for tonight as well. And we are going to discuss that. So we need to understand the context of what the NFP number is going to be released at. We are currently looking at a number that's already below 200,000. So we'll work with that context as well. Okay. So the NFP data is a crucial indicator of the state of the US labor market and can significantly impact financial markets. In fact, if you are talking about FX market, NFP and CPI is probably two of the most volatile news releases. So NFP has been the case, and I've done more than 200 NFP, so I know what it feels like. And but yeah, it is something that's very volatile. But does it impact all the other currencies? No, it impacts certain currencies, only certain currencies. Okay, so NFP figures are basically closely watched by traders and investors, particularly in the forex market, where currency pairs like the Euro USD, the dollar Japanese yen, dollar Canadian, dollar Swiss, gold is also affected by it as well to a certain degree. But the pound USD, yeah, they kind of exhibit high volatility in response to the report releases. So anything that has USD in the currency pairs, that gets affected. The other currencies like currency crosses, for example, like the Euro pound, the Euro yen, sterling yen, they don't get affected directly. Typically, in terms of initial releases, they are not as volatile as, let's say, the Euro USD, the pound USD, the Aussie USD, dollar Swiss, dollar Canadian, dollar yen. All right. Okay. So you kind of need to figure out what currency to trade the news with. So it doesn't affect all currencies per se. So I do apologize. I'm kind of having a little bit of a fever. Okay. But anyway, yeah. So it doesn't impact all currencies the same way. So you kind of need to understand, and there are going to be currencies that we're going to be focusing on tonight as well. Okay. Now, The release date is basically a special time for many traders who have learned to successfully use special non-farm strategies. After the release, there are strong changes in quotations and even trend reversals. In terms of algorithms of technical analysis, basically stop working during the release. It'll go back to normal, but typically during releases, it kind of creates a little bit of a much bigger noise, much more volatility, and it does affect some strategies as well. So some traders actually kind of avoid the NFP session. Some actually look forward to the NFP session. It really depends on how you want to be trading it. I think longer term traders kind of tend to move away from the NFP sessions. They will wait before acting on the NFP numbers. So they'll wait until the release before they start opening up their positions. Shorter term traders, they will trade the news. And when we talk about news trading, it's actually going to be different. We'll discuss this next Tuesday during the webinar as well. So according to the BLS, NFP non-farm employee classifications account for approximately 80% in the U.S. business sectors, contributing to the gross domestic products in the U.S. So if we see a lot of positive gain in the NFP, then it's more productive for the economy. We can expect a little bit of a much better GDP result. So it does add up as well. All right. So the best assets for non-farm trading, as we discussed before, is the Euro USD, dollar Japanese yen, dollar Swiss, Aussie USD, New Zealand USD, dollar Canadian, Pound USD as well. It's not included there. And they do show a very, very high volatility as well as gold. Okay. So the other number that we are looking at is the unemployment rate. The unemployment rate is calculated in percentage and is also published at the same time as the non-farm payroll reports. Now, is the GBP USD not a good pair for the NP? Yes, it is. It's just I kind of left it out, but it is, yes. So yeah, an unemployment rate calculated in percentage and it's published at the same time as the non-farm payroll report. The unemployment rate represents the proportion of the labor force that is currently not employed but is capable of being employed. The U.S. unemployment rate is determined through a survey of approximately 60,000 households. So it's not a lot. When we talk about the U.S. population, is kind of in the millions, tens of millions. But the survey itself is actually just from about 60,000 households, right? So according to the U.S. Bureau of Labor Statistics, for an individual to be classified as unemployed, they must meet the following criteria, which is they must be without a job. They must have actively looked for a job in the past 4 weeks. They must be available to start a job if offered one. Technically speaking, for the survey, for you to be part of the survey, you will be part of the unemployment claims that gets released every single week. So we can actually tally up if we do anticipate the unemployment rate to go down or is it going to go up from the weekly unemployment claims that gets published every Thursday. All right. So again, if a person doesn't meet this criteria, they are not considered to be unemployed for the purpose of calculating the unemployment rate. So basically, you must be without a job, actively looking for a job, and if a job is offered, you're ready to start a job. And this three is actually part of the requirements for you in the US to claim unemployment benefits, which is what the unemployment claims that gets released every week is. So we can actually kind of estimate it, and I'll show you the numbers later on. Okay. The last information that we're looking at is the US average hourly earnings. Now, this is contextual. Sometimes it's important, sometimes it's not important, depending on the situation. If, let's say, an economy is in a condition where higher pay, higher salary could drive up higher inflation, like what happens in the UK and Australia, then the average hourly earnings is going to be important. So the US average hourly earnings data is basically a report that's released monthly by the BLS alongside the unemployment rate and the NFP. It measures the average hourly earnings of workers in the US economy, very straightforward. Data is collected through surveys of businesses across various industries and encompasses both full-time and part-time employees, including overtime earnings. Economists, investors, and traders closely monitor this report as it can offer valuable insights into the state of the U.S. economy and its potential impact on inflation. So the logic is, if wages goes up, then people will have more purchasing power, right? And a higher purchasing power could actually drive to a higher inflation in the market, because there's going to be a lot more consumption in the market. So that's basically the concern here. So this here is contextual. It doesn't have a high impact every single month. Okay, so it gets released at the same time as the unemployment rate and the NFP numbers. But in terms of priority on how important it is, it's contextual. So it doesn't have the same impact every single month. All right. So in terms of how things are, NFP is number one. And that's going to be the first thing a lot of traders are going to be looking at. And the second one they'll consider would be the unemployment rate. Third one, sometimes if needed, we'll take a look at the US average hourly earnings. Okay. All right. So when trading based on the US average hourly earnings data, traders often scrutinize changes in the wage growth rate compared to the previous months, as this signals shift in the labor market and potential inflationary pressures. So if we are looking at whether a country is going to be facing more inflation, this is the data to be watching out for in terms of employment numbers. All right. So higher than expected wage growth may indicate potential inflationary pressures, as I explained before, which can result in higher interest rates and currency appreciation. Conversely, a lower than expected wage growth may indicate weaker inflationary pressures, which may lead to lower interest rates and currency depreciation. As with any economic report, it's important to consider the broader economic context and other indicators when trading based on the US average hourly earnings data. Okay, so again, this one here is very contextual. Okay, so let's talk about the strategy first, because we only have about 10 minutes before we need to run things through, right? In the end of trading strategies, there are going to be three main strategies traders use to trade the news. There's actually going to be four, and I'll explain that a little bit later. So number one that we are going to be focusing on tonight would be a strategy based on two pending order settings. This is called the straddle strategy. And you can also trade before the data gets released, or you can trade after the data gets released. Okay, but let's focus on this one here. If we talk about pre-NFP trading, a potential strategy is to trade the market's anticipation of the NFP release, right? So if you're working with consensus, then you can trade pre-NFP, but it's actually pretty dangerous from my point of view. This approach basically involves opening a position in the days leading up to the NFP release, with the expectation that the market will begin pricing in the anticipated NFP outcome. So you will actually need to close your positions before the actual NFP release to avoid the extreme volatility that can follow. Okay, so let's say the market is expecting a weaker NFP this month, then leading up to the NFP release, you are kind of hoping that price is going to take that consensus into consideration, and you basically trade before the number gets released. So this is actually going to be really tough unless you know what you're doing and you understand the context in terms of what the consensus is compared to the previous months. So if you understand the fundamental analysis, you can trade the pre-NFP trading, but it's going to be, I would say, not a lot of people are going to be doing that. Okay. The other one that we are going to be doing tonight is called the straddle strategy. So the straddle strategy involves placing two pending orders, a buy stop and a sell stop, above and below the current market price just before the NFP release. And we're actually going to be placing that orders 5 minutes before the NFP gets released. Okay. That way, you can potentially profit from a strong price movement in either directions. And once one of those orders is triggered, immediately cancel the other order to avoid being exposed to further market fluctuations. Someone is saying stay away from the NFP. And if you don't understand what it is, I would say yes, stay away from the NFP. Okay. Does it mean that NFP gold will go high? No, it doesn't work that way. Okay. What about selling in? It's not included in the NFP? Selling in, no, it's a secondary impact onto the market. So typically it doesn't have an immediate reaction like the US dollar. Okay, we'll show you selling in later on, but you'll see how it works. Okay. Right. The third one is actually going to be fading the initial move, right? So the strategy involves waiting for the NFP release and observing the initial market reaction. Once the initial volatility subsides, you are going to be looking for opportunities to trade against the initial move. So with the NFP, typically, and hopefully, we don't get a whipsaw in the market. So hopefully the market goes in one direction first. Once it breaks through a certain range, typically following the volatility, market actually comes back to where it started, right? This is where we want to be trading the fade. And hopefully I can show you how to trade the fade. Out of the 5 NFPs that we've done, 3 of them we can actually trade the fade. 2 of them we didn't actually get a fade, okay? So this approach is based on the idea that the market often overreacts to the NFP data and that a retracement or reversal is likely to follow. Now, the fourth one is post-NFP trading, obviously. Instead of trading during the release, you can wait for the market to digest the NFP data, and you can look for trading opportunities in the hours or days following the release. This strategy allows you to avoid the heightened volatility during the release and focus on longer term trends that may emerge as a result of the NFP data. So if you take a look at what's going on here, we've got 4 strategies. You can trade before the NFP gets released. You can trade during the NFP release. You can also trade immediately after the release. And then the last one is actually wait for everything to settle down. Do your normal technical analysis, for example, and kind of digest the fundamentals, then make a decision after the NFP numbers. Okay, so there are actually going to be 4 trading strategies that you can use, but we'll focus more on the straddle, and we'll see how the market react during news releases. Okay, so regardless of the strategy you choose, keep the following tips in mind. You need to manage your risk, always use appropriate stop loss, and never risk more than a small percentage of your trading capital on a single trade. Stay informed, keep track of economic news, forecasts, and market sentiments leading up to the NFP to make better informed trading decisions. Be flexible, be prepared to adapt your strategy based on the actual NFP data and the market's reaction to it. All right, so I have about 2 more minutes, and I'm actually going to give you a little bit of what we are anticipating tonight. So the NFP number, we are going to be looking at 187 previous month. 170,000 is what's expected, but take a look at the range. It's actually 150 to 170,000. So it is actually a huge gap in terms of the potential consensus for the NFP numbers. The unemployment rate is expected to drop from 3.8 to 3.7%. So the way we look at it is this: if the NFP number comes in lower than the previous month, and that's bad, okay? But if the unemployment rate is lower than the previous month, it's good. So the way we look at this readings is actually kind of the opposite. If it's a good number, we need to see a gain in NFP and a drop in unemployment rate, okay? For a bad number, we're expecting a lower NFP number and also an increase in unemployment rate. So the way we look at it, it's the opposite, okay? So for tonight, we're actually coming in with a little bit of an anticipation that the number is actually going to be a mixed data, because we are expecting the NFP to drop from 187 to 170,000, but the unemployment rate improving from 3.8 to 3.7%. Okay. All right. So that, oops. Okay. Let me move this here. Okay, we're still good? We're still connected? Yeah? Okay, we got 5 minutes, and I need to start placing our orders right now. We'll start with the Euro USD. This one here has spiked up a little bit, but that's okay. We can adjust it a little bit higher. So you want to create a little bit of a range. We'll take a look at the range today. So we've got a low at 1.0531 and a high at 1.0568. So I'm going to create a buy stop right now, just about there, about 1.0570, or you can have it at about 1.0575 if you want to give it a little bit more range. I would go with 75 at this point in time. So if you want to create a buy stop, just right click and you can go to trading and create a buy stop above the current market range. So if it goes above it, it's going to trigger a buy. And for the lower side, I'm actually going to go with 1.0525 on the sell stop. And remember, whichever side gets triggered, you need to close the other order, okay? So just keep that in mind. We only want one position. So if one is triggered, you need to close the other. Okay, so I'm gonna put it up here so you guys can look at it. So the Euro USD, we got a buy stop and a sell stop. And the pound USD, the same thing. We want to find the current range that we have. List market is providing that range. Okay. So let me see if I can zoom in a little bit. No, that's the best I can do. Okay. All right. So you want to highlight the range, right? 122.18, so about 122.25. I'm gonna have a buy stop at 1.2225 for pound USD, and for the lower side, I will actually have it at 1.2150, a little bit lower. Okay. All right, so that's that. Next, it's the Aussie USD. This one here is in pretty much a range bound market condition. So I'm happy to go with any of those sides there. But yeah, and then we'll go for gold. Gold, you want to have your buy stop at about 1830, higher than 1830, and a sell stop below 1815. Okay, so this is for gold. I know a lot of traders are going to be looking for gold. We have about 3 minutes. Right? Aussie USD, we've done that. Dollar Japanese yen, I want to have this slightly above the 149 level. I would probably have this at about 149.25. And to the downside, I would actually have a sell stop at 148.25. So 100 pips in terms of range. Okay. Now, the selling is going to be different. You can take a look at this one here. This is currently not in a range bound market condition. It's kind of still trending a little bit. It will follow directions of the dollar Japanese yen at this point in time, but during NFP release, we are going to exclude Euro yen and sterling yen as well as the Aussie yen. The dollar Canadian, you can have this as well. This one here, you can have it about 1.3735. And on the lower side, you probably want to have it a little bit lower at 1.3690. Okay. Okay, dollar Swiss. Yeah, you can still have this one here. I would place it below 91 cents if you're looking for a sell on the dollar Swiss. So sell stop lower than 91. In terms of a buy stop, you want to have it slightly beyond 91.50. Okay, so that's that. We're just waiting for the number to get released in a minute now. You guys can see something. Yeah, I'm looking at the screen. Everything seems to be okay on my side. Okay, so we need to be quick. We've got the buy stop, sell stop, and everything else placed there. Remember, whichever hits, we want to close out the other one, okay? All right, so let's see what happens here. And I'll read out the NFP's numbers as well. Okay. NFP has 336,000, super positive unemployment rate. It's flat at 3.8%. We've got a sell on the Aussie USD. I'll close the buy on the Aussie USD. We've got dollar Canadian triggered. So I'm going to close the dollar Canadian sell stop. Dollar Japanese yen is also going to get closed. Gold is also going to get closed. And everything else is still, I didn't get filled on the Euro USD yet. Pound USD is not off the range as of yet. So waiting for the Euro USD to get triggered. As well as the dollar Swiss. All right, so Euro USD sell has been triggered, so I'm going to close the buy. Should create a little bit of a spike in the market. Pound USD hasn't been filled. Aussie USD, I need to close out Aussie USD. Okay. So the number is actually surprisingly good. Previous month's number was revised up to 227 from 187, and we got 336,000, which is super positive for the US. I think this should be, in terms of price movement, it should be in more or less in a one-way direction. I'm just pretty surprised that the pound USD is not triggering anything. I just got triggered on the pound USD sell. Sorry, something got triggered. Dollar Swiss sell was triggered. Buy was triggered. The pound USD. So yeah, I need to create a little bit of a range on the pound USD. So we'll see what happens here. Okay. Okay, good. So far, so good. I got filled in a little bit late, but we'll see how it is. But everything else seems to be pretty much in a one direction at this point in time. There's a lot of volatility in the market, but the number is surprisingly good. It should be positive for the US. We might get a little bit of a fade, hopefully. We'll see how it is. This is only the first 2 minutes. And you can see how the reaction is on the trades there. It does create a little bit of a whipsaw. But yeah, so far so good. Everything is still going in one direction. I think we could see a little bit of an extended run on the US dollar strength. This is a surprisingly good number. Previous month number was revised up from 227,000. You know what? I'll just show it to you here. Okay. So previous month's number was revised up to 227,000. It was 187. Market was just expecting 170,000. We got 336. Unemployment rate remains flat at 3.8%, which is considered to be okay. So yeah, so far so good, and it's going accordingly. No surprises there. Average hourly earnings is at 0.2%. No increases. Year-on-year hourly earnings kind of fell down a little bit from 4.3 to 4.2. Participation rate, it's at 62.8%, which is all right. Okay, so yeah, everything is running except for the pound USD. For whatever reason, the pound doesn't want to budge. I'm just not getting filled on the pound USD as of yet. It's revised up. Both unemployment and NFP data shows a strong U.S. economy. Should we find short position on pound EU if there's any pullback to the upside? Yes, you should. So we'll take a look at this later on. So yeah, you can see everything is going all right now, which is good. This is I think this is great. The number is surprisingly strong for the U.S. All right, so we'll leave this one here for a little bit. We'll come back to this in a minute. But let me give you a little bit of what to watch out for on the Euro USD. In terms of Euro USD, in terms of target rate, I think we should be looking at a little bit of a floor at 1.05. But I think we could break even lower. But if you are worried that 1.05 might cause a little bit of a bounce, and I think it could. So what I'm going to do is I'm actually going to close out on some of the positions here. Just looking at this, yeah, the Euro USD. So yeah, it's kind of whipping back at this point in time. What is causing the whip back? It's the dollar Canadian. Not looking too good on the dollar Canadian, but everything else is all right. So I actually don't like dollar Canadian. I don't like how it moves at this point in time. I would actually close the dollar Canadian. The Euro USD, it is currently breaking 1.05. It's at 1.0505. So causing a lot of volatility. Gold as well. I think the gold movement it's pretty volatile. The Euro USD, in terms of Euro USD, in terms of target level. So let's do a take profit levels on the Euro USD. We would go for about 1.0482. The pound USD hasn't been filled, fortunately. I closed out the dollar Canadian. Aussie USD, we can go a little bit lower. We can look at about 63 cents on the Aussie USD. The dollar Japanese yen, we are looking at 150. No brainer on the dollar Japanese yen. Gold, this one here is a little bit of a concern. It's not dropping down as much, as quickly as I want it to be, but we should anticipate a potential push, maybe about 1805. Okay, and that's pretty much it. Pound USD just got triggered. So I'm going to close a buy on the pound USD. The pound USD, in terms of potential target, we are going to be looking at 1.21. Yeah. About 1.21, or maybe 1.2150. Not much, but yeah. About 1.21. We're happy with 1.21. Okay. So we got one running positions at this point in time. So the other strategy is we anticipate a little bit of a whipsaw to happen. It's not a whipsaw. We're anticipating this to pull back to the entry level. So I should have closed that out just for example. But right now, we might actually see price pull back up a little bit. We could potentially see price pull back to test the previous range before going back down. Okay, so we can actually trade the fade. If you want to buy the Euro USD right now, I could create a new order where I can buy the Euro USD. So hopefully this would hedge it. I'm not sure if it would close it. Yes, it would hedge it. So let's focus on this one here as an example. Currently, I'm fading this one. So the buy strategy for the one that I just traded is actually a little bit of a fade. There could be a potential return towards 1.0525 where we got our short. If not, then we want to have a little bit of a stop loss as well. So what happened to the buy? I think the buy got closed. Okay. So I must have clicked something there, but you could actually create a little bit of a fade right now if we anticipate this. Maybe I'll show this on Trading View so you guys can see what's going on, what do we anticipate on the Euro USD. So right now, if we look at the Euro USD as an example, it's finding support at 1.05, right? So you can actually go into the 15 minutes time frame and wait for this level to actually hold as support. I would wait for about 7 more minutes, and if price is still above 1.05 and it's showing signs of bouncing up, then we could potentially be looking for a little bit of a buy. But for now, let's just let this one run here. Okay. Now I want to show you the Euro yen and the sterling yen, and the reason why I wasn't focusing on the Euro yen and the sterling yen, in terms of volatility, it does have a separate way into looking at this. Because if we look at the sterling yen and we consider the same breakout strategy, it would have a little bit of a floor at about 180.83, and price is nowhere near that. So your orders wouldn't get filled. The same thing with the Euro yen. If you're looking for a little bit of an intraday breakout, you would be looking at about 156.50, and price is nowhere near that. So we don't have an immediate reaction into the Euro yen or the sterling yen because they would be considered currency cross. We want to focus on the US currencies, USD pairs, right? Because they are impacted directly by the US economic release. Maybe it's a little bit hard for dollar going strong since dollar yen will touch 150 for the first time. For the third time, look, I think the concern for the dollar Japanese yen it's potential Japanese intervention, right? But it doesn't mean that the US dollar it's weak. It's just that market's a little bit more cautious of potential intervention. We already discussed the potential intervention from the outlook this week, and I would classify what happened this week as it wasn't an intervention. I actually published out a little bit of a report as well on Telegram on this one here, but it's not an intervention. It's more on profit taking as well as rate checking that was done by the Bank of Japan that causes a little bit of a panic and people just let go of that long positions. Anyway, I'm looking for a fade on the Euro USD as well. The Pound USD probably not, but the Euro USD, I'm definitely going to be looking for a potential fade on the Euro USD. When we talk about the fade, it basically means we anticipate price to go back to the original range for a little bit, okay? Because we do have a little bit of a floor at 1.05 for the Euro USD, okay? We should have gotten out at 1.05 just now. But yeah, it is what it is. Can you still hold short? Yes, you can. If you're holding short on the breakout for the Euro USD, you might want to have your stop loss a little bit higher and maybe at 1.0570. I know it's a little bit far, but regardless, if you're holding on to your positions, you need to have a stop loss on your trade. And the closest stop loss on the Euro USD would be at about 1.0570. Okay? For the Pound USD, I got filled in a little bit way too late on this one here. I should have been filled at 1.2160. So there's a little bit of a slippage on here, about 20 pips on the Pound USD. All right, but the stop loss should be there in terms of your take profit. You can go for a little bit lower if you want to go for a 1-to-1 risk reward ratio. Okay. Aussie USD for stop loss, you definitely want to have it above, closer to 64 cents, maybe about 63.85-ish. Should be a good enough level for a stop loss. The dollar Japanese yen, this one here, still aiming for that 150 level in terms of stop loss. It's going to be tough, but maybe not too far away. We're probably going to be looking at slightly lower than 148.75 at about 148.70, because we do have 148.75 as a stronger support level. If you want to have it a little bit safer, then have it below 148.50. Okay, still going to give you about 1-to-1 risk reward ratio. Now for gold, this one here is a little bit catchy. You really want to have your stop loss above 18.25. Okay, in terms of target level, you can go for 1805, 1800 for gold at this point in time. Dollar Canadian, I was out of the trade, and the reason why I was out of the dollar Canadian, and you need to understand how we look at this. We don't see a huge breakout, a huge consistent breakout for the dollar Canadian, right? You can see what happened here with the dollar Canadian. It actually kind of reverses on itself. If we didn't get out, our losses would actually be a lot bigger, right? So the dollar Canadian, it does have a unique mechanics when it comes to the NFP trading. Typically, if we don't see a consistent positive run on the dollar Canadian immediately after the news releases, just get out of the trade, because the dollar Canadian can stay in a range bound market condition during the release of the NFP numbers. Do you know why? Because at the same time the NFP is released, the Canadian employment numbers also get released. So we're looking at both employment numbers, and sometimes they just don't move as much as we want them to be. Okay, so the dollar Canadian side is a little bit tricky. Okay, correct. There's Canadian unemployment news, and that's the reason why the dollar Canadian gets a little bit tougher to navigate, because you need to immediately compare what gets released for the US and also what gets released for the Canadian numbers. And this is the reason why for the dollar Canadian, I would just close out my position just now, because it does take a little bit more mechanics. There's a trick to trading the dollar Canadian during NFP release. As WD says, there's also Canadian unemployment rate, Canadian employment news that gets released as well. So I can actually show it to you. Oh, I just closed it anyway. I can show it to you. Just give me 1 second. Okay. So yeah, the Canadian numbers also get released here. We've got the Canadian unemployment rate, which is flat at 5.5, which is good because expectation was 5.6. Employment change also we've seen a little bit of a boost, 39.9 to 63.8. Part-time employment, huge jump, but the full-time employment was a little bit low. Participation rate actually improved a little bit, so we are looking at both the U.S. number and the Canadian number to be good. So it just counteracts each other, and that's why I was closing out on the dollar Canadian positions because we are flat, right? But everything else, we are good. Are we happy with our trade for tonight? I would say so. Yeah, you know what? I'm happy with all this. I would just close it out and done. We are done for the NFP numbers. If you guys want to hold on to your positions, you can move your stop loss to break even at this point in time, or you can get out, scale out if you want to, be done with the news trading. But everything else for the pound USD, do we anticipate further drop to happen? Yes. Unfortunately, for everything else, I think the US dollar is still going to be a winner. It was a huge number, 336,000. It's super surprising because we've been stuck with a number that's lower than 200,000 for the past few months. And I think this is a surprisingly good number for the US employment sector, right? All right, everyone's happy? Good. Okay, so let's talk about how far can it go. I don't anticipate a fade at this point in time because the reason why I'm not going to be looking for that fade to happen, if we take a look at the 50-minute time frame, we have surpassed 1.05. And there's still a little bit more room to go to the downside, enough momentum, enough RSI to actually drag this down lower. Now, if you are shorting the Euro USD, what are your potential targets for the Euro USD? For tonight, there would be a high chance, if it does close on the hourly below 1.05, it could actually track even lower. So I'm just looking for that projection lines that we have. Where's the projection? Sorry, I'm just looking for something. Forecast, there we go. So for this one, if we close below 1.05, there could be a higher chance it is actually going to drop down closer to 1.0450 on the Euro USD. So if you have that short position, we have a short position, we just got out. But if you're planning to stay in there, you actually want to have your stop loss a little bit lower. I would probably go with break even at this point in time. In terms of target, you can go for 1.0450, but everything else should be at break even for this one here. So the trade would be triggered at about there. Actually, I'm just gonna move it. You should have your stop loss at break even on the Euro USD, right? There's still potential target towards 1.0450. Likewise with the pound USD. All right, this is done. That was a trade that we were posting on Telegram. On the pound USD, if you get filled at 1.2160, which is where I should be filled, but I got filled a little bit lower at 1.2140, your stop loss should be at break even, and your potential target is actually going to be at 1.21. We anticipate a little bit of a projection towards 1.21 at this point in time. Where's my forecast? There we go. So for this one, we are anticipating a little bit of move towards 1.21. There's a little bit more room to go for this one here. And dollar Japanese yen, no-brainer. For this one, we're still going to be aiming for that 150 level on the dollar Japanese yen. If you got a trade on the dollar Japanese yen, what you really want to do for your stop loss, you want to have it slightly below that 148.75 level. If you're brave enough, you want to hold this for a little bit longer, you can have your stop loss a little bit lower at 148.45-ish, just slightly below that 148.50 level. Target wise, we're still going to be looking at a potential return towards 150. Okay, what if unemployment rise? Unemployment is flat at 3.8%, which is good. It kind of helps out a little bit. If the unemployment rise, I would still think it's going to be dollar positive because the NFP is double that, and the previous month was revised up. The revision on the previous month was huge, right? 187 to 237,000 is actually huge. And we got 336,000. So even though, if we get a higher unemployment rate tonight, it would still be dollar positive. And it looks like it's going to be a more of a one-way direction at this point in time for the market. Okay. Aussie USD, but yeah, you probably want to get out at 63 on the Aussie USD. Is there more room to go? I think so. There could be a little bit more room to go for the Aussie USD, but still we're looking at about 62.95. So really not much more than about 63 cents at this point in time. There's not much of a range on the Aussie USD. Dollar CAD is flat. Dollar Swiss, yeah, we can go for about 92 on the dollar Swiss. A couple of levels to watch out for. Maybe yesterday's pivot level at about 91.80, right, to about 91.20. Sorry, 92, 91.80, and 92. This is going to be your, it should be the level where you should consider getting out on the dollar Swiss if you're trading the dollar Swiss. So there's just a little bit more to go, maybe about 10, 15 pips. You kind of need to consider closing out your position. But whatever positions you have that we just opened during the NFP, that was triggered during the NFP, move your stop loss to break even if you're holding on to your position. Okay, if you're happy with whatever you get for tonight, we are only trading the news tonight. You should get out of your position if you're happy with what you have. Okay, simple as that. All right. What else? Gold, yeah. A little bit concerned with gold. I'm not seeing a lot of a strong movement on gold here, but yeah, in terms of how far down, I think we are going to be looking at about 1805. The reason why 1805 and not 1800 because we've got the support 2 on the daily pivot at 1805. So probably not going to be a significant drop on gold at this point in time. Okay, so just trade carefully with gold there. What if you're not happy? If you're not happy, it's your choice, man. You want to be happy? You don't. If you're not happy, you want more, then stay in the trade. Just move your stop loss to break even. Any chance there will be retracement for the US dollar pairs? I don't think there's actually going to be a fade. I don't think we are actually going to be looking at a fade. We're not going to be looking at that at this point in time, but just in case if we do have a retracement, probably use the Euro USD as an example, okay? This is actually going to be tough, but if we do have a little bit of a retracement, it will likely be at 1.0525. It might retrace 1.0525, and that's how far you can go. But it will be super risky to fade it. The reason why we don't want to fade it, the number was just surprisingly positive for the U.S. Employment numbers. Sorry, for the U.S. employment, the number is surprisingly positive. And there are two things to consider. We have double the forecast. And what's important, I think, was the previous month's number was revised up and we still get a much higher number. So it's too risky to trade the retracement at this point in time. Okay, so I don't think there's actually going to be a retracement. Even if there is, it's going to be limited at 1.0525. which is kind of the entry point that we have on the Euro USD. Okay, so yeah, definitely a lot of strength, and you might want to be focusing on the 10-year yield. I think we are on track towards 5% for the 10-year yield, and the dollar index might actually surpass 107 again, so we'll see what happens here. Audio muted? Audio seems to be good on my side. Everything is all right, audio? Okay. All right, so I didn't have time to show you this, but we already trade the NFP numbers, so which is all good. Again, this is the code that you can use. It's Nonfarm 2023. This is good until the end of the year to double your deposit bonus when you deposit into your Octa account. And any questions? We'll do. How about Euro Canadian? Let's take a look at Euro Canadian. I don't think crosses are going to have a huge impact into the market, but we'll see. Canadian numbers good. Euro Canadian is down. I think this one here, you probably want to wait for the hourly close below 1.44. Okay, so definitely want to wait for an hourly close below 1.44 on the Euro Canadian. But if you think about it, right? I mean, if we zoom out, how far can we go with the Euro Canadian? You know, you're probably going to be looking at a little bit of support, maybe about 1.4350. It's probably not worth it to go short Euro Canadian at the current level. If we trade the breakout just now, that would be okay, but because we're focusing on the US employment numbers, that's why we didn't focus on the Canadian employment numbers. Okay, but if you did the breakout just now, it was okay. But looking at Euro Canadian right now, I wouldn't go for that. The risk reward ratio just doesn't make sense. No, I don't think UCAD can go anywhere tonight because we have a little bit of a conflicting data on the dollar Canadian. I already explained that just now on the dollar Canadian. New Zealand USD ranging for over 1 month. We've got Aussie USD ranging for 1.5 months. So it's just typical for those. The US 30 push up as it's in a strong support area. Not quite yet. We actually discussed about the US 30 today. So let me show you the US 30 in terms of that strong support area is actually at 33,000. We are currently below that support area. So if the daily closes like this, we might actually slide down a little bit further, maybe towards 32,500. If you're looking for a bounce in the equity market, you need to wait for the second week of October. Okay? We already did gold as well. Okay. All right, the next session that we are going to have is actually going to be next Tuesday. It's going to be theory and practice of niche trading, advantages and disadvantages of niche trading. If you want to understand a little bit more what's the difference between niche trading and fundamental analysis, feel free to join in next Tuesday. The most profitable news for trading, one of them is actually today, the NFP session. News trading and price action, we'll discuss that as well. And then we'll also go back and understand the buy stop and the sell stop strategy. We'll also look at the buy limit and the sell limit strategy for news releases as well. So for those that are new, you might not be familiar with what we just did with the buy stop and the sell stop. So if you want to understand a little bit more, then join in our session next Tuesday. All right. Okay, cool. Okay, so we can wrap this up for tonight. I think it was a good trade overall. It's pretty good NFP. We didn't have a lot of whipsaw. Everything goes in one direction. It's all good for today. So thanks for joining in. Don't forget we have the Tuesday session and also the live CPI, which is going to be on Thursday. More or less, we're going to be doing the same thing as well for the live CPI. Okay, so with that, good luck to your trades If you're all still holding on to that position, just make sure your stop losses are moved to break even. Okay, so thanks for joining in, and I'll see you next week.